Give me your read of the inflation data that we got in.
Well, I don't think you should overreact to 1 month's data. That looks to me like some of the inflation data are just moving sideways, which suggests the stickiness that we've all worried about, particularly as you get into the last phase of disinflation. So let's not draw too many strong conclusions yet, but the last couple of reports have, as I said, shown the inflation data moving sideways.
Closely are you following the sort of conflicting moves in the labor market? You have unemployment moving higher even as more jobs are added. And give me your perspective on how the Fed will take labor into consideration.
Well, it's one side of the dual mandate, as you know. Having said that, I think the focus really is substantially on inflation at the moment. They will look at the labor market, and I think they'll consider it a pretty solid, pretty healthy labor market. The uptick in unemployment, which was not much, but it was still moving up, probably represents some participation improvements, some people coming into the labor force. So in that sense, it's a healthy kind of thing, and I think they'll view the labor market as slowing and rebalancing, but still in a very healthy state.
You have Fed watchers, some of whom think, well, look, we're moving in the right direction. We've seen inflation come down significantly. Because of that, it's time to give us a break on rates. And then on the other hand, those who say, but look, you have some months where we're still seeing some anomalous inflation reports, that the economy is doing well. So why not just stay where we are and keep things even, Steven? Give me your perspective and your opinion here about what the Fed should do and when it should do it.
I think the Fed wants to avoid a mistake, and a mistake would be to cut rates too early, remove restrictiveness in the policy setting too early, and then have a resurgence of inflation. Maybe the last report, particularly the PPI report that you referenced a few minutes ago, maybe that is some sign that we could have inflation resurging in some way. So I think the position of the committee is, as long as the economy seems to be tolerating this level of interest rates, I think we'll stand pat and make sure when we make the move that we've got it right, make sure that, in fact, inflation is going to be on a path to 2%.
In December, we seem to have gotten indications from the Fed that there would be 2 to 4 rate cuts this year. Do you think that stands?
Well, this meeting is a meeting in which they update those projections. And as you point out, the range was 2 to 4. So that means there's a variety of opinions on the committee. I suspect what we're going to see on Wednesday afternoon is something very similar to what we saw in December. However, there could be some movement within that range. That was 15 of the 19 members of the committee who were from 2 to 4. There could be more who are now a little bit leaning toward 2, and perhaps fewer who are expecting 4. That's just showing that they're being a bit more cautious in terms of the timing and the number of rate cuts this year.
Dennis, we want to get your take on a Wall Street Journal report on noted Powell critic, former President Donald Trump. He picked Powell to run the Fed, but the Journal says Trump met with some economic advisors, Stephen Moore and Art Laffer in Mar-a-Lago last week to discuss a short list of potential Fed chairman nominations, recommending 3 candidates: former Fed governor and George W. Bush advisor Kevin Warsh, former Council of Economic Advisors chairman under Trump Kevin Hassett, and Laffer himself, who was a longtime economic advisor to President Reagan. What are your thoughts about these men potentially to lead the Fed, and whether they would distinctively turn it from where Jay Powell has been guiding the Fed?
Well, I'd like to kind of mouth the same thing the Fed mouths, and that it's an apolitical kind of thing. But the only one of the three whom I really know is Kevin Warsh. He's an able person. I served with him for several years. The other two I don't know. Let me just say that I think Jay Powell is doing an excellent job as the chair of the Fed, and he is keeping the process apolitical, and that's fundamental, I think, the way a central bank has to operate.